welcome back, traders and investors. We have Rich Tullo on the line here, and Rich, you know what you're famous for, and Benzinga's pre-market prep for. You know what you're famous for, correct?
Excuse me, no. You know what? What's that?
You were our first guest that we ever had on the show.
Oh, okay.
Yeah, yep. So now we're having you back on again. Rich, a little bit of weakness in the market the last couple days. Are you standing up in front of this market, or a little bit cautious?
I think you got to be very selective. I don't think we're heading into anything like a bear market, but 5, 7% correction is not completely off the table. I think you got to be very careful about what you're investing in right now and what you're trading in right now. And I think there's been a bit of flight to quality with the Nasdaq underperforming the Dow and larger indexes. So I would look into that as some consideration. My bias has been for the last 3 or 4 months against some of the high beta stuff because I think companies like Netflix and Pandora, not that they're not great companies, but they've just been overvalued. And so when I can buy cash flow cheap and I can buy momentum at very, very high prices, to me, I'd like to be in the cash flow cheap side of things
Okay,
and
let's
avoid the
talk about
momentum.
this. Let's talk about this Pandora here because I see that on the March 20th, you did a rating change on that, and is that correct? I mean, you have a higher price target on this, and it hit the target, and maybe you brought things down a little bit, or
Yeah, that's precisely right. Currently we got a $23 price target in Pandora.
okay,
And we had a market perform for a while. Then we downgraded to underweight, which is our version of sell or short.
okay,
And so market performance is basically we're like Switzerland, and underweight. We really think it's expensive, and investors, if they own it, should kind of get out of the name. And the thesis has been we just don't like paying much over 7 times revenues for any stock, especially one that has not demonstrated a track record of profitability as yet.
well, you
They
nailed
broke
that
even.
one, Rich. I mean, you nailed that one. It closed on the 19th at 34.91. On the 20th, it closed at 33.72, and here we are closing yesterday under $27. You still have a $23 price target on it. It's trading above the target. So you're just hands off on this until it gets substantially under $23?
As it gets close to 23, we'll reevaluate the situation.
Okay.
I think they have some pretty decent momentum in their ad sales, but their core business, they haven't added substantial MAUs, monthly active users, in about 2 or 3 months. And so the business is slowing down, and we're going to have to just play wait and see game to see how that pans out and how that fundamentally influences sales and ultimately the loss.
Okay, I see you're still wildly bullish here. Madison Square Garden, overweight, $85 price target. Now, I'm a being the sports lover I am. When they did that Phil Jackson pickup, I was just like, I really couldn't believe how much they rallied the stock. They're paying them a lot of money, and I know that's only a small portion of Madison Square Garden, but got it the Knicks. But it's got that pop over 60. Now you're coming back down to the $55 level. Why are you so bullish on Madison Square Garden?
Well, the first thing I think that Phil Jackson, if he works out, this is a company that stands to generate about $70 million in revenue if the Knicks make it all the way to the NBA Finals. That's a big if, but if he's able to do that, I mean, there's a substantial return on his investment. Um, Outside of that, what we really like in this company is the hard assets. All right, so when we talk about something like Netflix, what do they own? They don't even own House of Cards, right? What does Netflix? What does Madison Square Garden own? Well, they own the building Madison Square Garden. They own the
Who
LA
owns House of
Forum.
Cards? Do you know who?
A group of MRC, which is backed by Kevin Spacey and Sony.
Oh, really? I've been watching
Yeah,
that. Do you
so
watch that show?
I tried. I like the original version and out of the BBC.
Oh, okay. All
It's a
right.
remake.
Okay. Anyways, I'm sorry. Back to Madison Square Garden here.
Okay, so they own these hard assets. What's 2 square blocks in the middle of Midtown Manhattan worth? I would argue it's probably a bit over $2.5 billion. They own the Rangers and New York Knicks. Those teams individually worth over $1 billion. Generates we're going to generate between 380 and 420 in free cash flow over the next 2 years. They just sold Fuse for $226 million, 265 if they earn out, and we think they're going to use that money down the road to pay a dividend and buy back stock. Stock company itself is undercapitalized. We think they could raise about $1 billion in debt and buy back more stock. So, all these things are fundamentally positive. The near-term negative is that they did great last year, therefore they're facing a negative playoff headwinds this year. It's going to be, before we start with the add backs, about $47 million in lost revenue because the Knicks and the Rangers are not in the play. It looks like the Rangers are going to be in the playoffs. So, to offset that, the Rangers probably have to go to Stanley Cup, which that's a challenge. We kind of think they're going to lose about $30 million off the top line, about $4 or $5 million off the cash flow line. But that's a tough comp, and we think that creates the opportunity to buy a stock that we think is worth $85 or $55 today.
Okay, all right, well explained there. TiVo, you still have an overweight on this and a $23 price target. The stock just had a great run up to over almost $14. It's fallen on
Yeah.
hard times the last 2 days. Is it just symptomatic of I mean, I don't know if you
Yeah,
can really
it's just
call this a
systematic.
Momo, but yeah, this is taking a hit the last
Yeah,
couple days.
I mean, TiVo is one of the ones we'd be adding to the position. You could buy stock, trading at enterprise value to free cash flow in the single digit range, I think about 6 times. We think that's a great return for investors. You got to keep in mind with TiVo, they got about 60 to $70 million annuity on their revenues from these long-term contracts they've signed with all the cable companies for the TiVo implementation. We think TiVo really benefits from the Time Warner Comcast deal because all these Time Warner subscribers in New York and LA will have access and the ability to buy a TiVo box and have Comcast install it for them. So we think that's kind of a big catalyst for the platform, and it's really the only platform today on your TV set, right? So we have all these devices that can work through your iPad. Don't have too many devices that can work through your actual TV set and your set-top box to create, to merge the over-the-top experience with your cable. And we think it's a subtle difference, but it's actually it's important to high-end customers. So we see TiVo evolving kind of like an IMAX or a Bose, where it's they're gonna have a high-end consumer product, and on the low end they're gonna provide a lot of back-end systems for cable companies.
Right. Are they running into any problems, with the regulators on that Comcast merger?
We think the merger, because you're talking, the law is kind of funny. When two companies are monopolies already, and they merge, it doesn't really change much. We saw that with Arbitron and Nielsen. They'll ask questions, but unless these questions are politically motivated, the law itself doesn't really draw the distinction between two monopolies and or not. And so, since they weren't competing together, that shouldn't create a problem according to the law. Now, according to the politics, they may have to shed some subscribers, but we think they shed subscribers in markets that are more facing Charter, such as Kansas and Texas. So they
Okay.
may have to shed 3 million subs, but these are in markets. TiVo's got a relationship with Charter already, not a great one, but they do, and and it's not the core New York market and the LA markets where we think that the demand for this product would be better.
Okay, Live Nation here. You have an overweight rating and a $33 target as of February 25th. And whoa, this thing has hit the skids here over the last couple, over the last month or so. It's come down from the 24.70 level all the way to $20, and really bad performance the last 2 days here. It looks like you got good support here at 20. What did you attribute that the longer term sell off, and then also over the over the last three trading sessions it shed 3 points.
Yeah, I think it was a couple of funds. They're tech facing that own this one that probably are liquidating. They announced today that Cotu lost 9% last month, and they're getting hit with about $9-10 billion in redemptions. They're big
Okay.
holders of a lot of growth names, and I wouldn't read too much into Live Nation on company specific. Also, you got to keep in mind, we're kind of a little bit spoiled. We didn't see it last quarter, but typically the fourth quarter and the first quarter
Are
are
we?
not great
Yeah.
trading quarters for the stock because it's a summer seasonal business.
Yeah, I was just gonna go into that, the seasonality of it here. So,
Yeah, it's very highly seasonal. This company draws about 60% of its revenues and about 70% of its free cash flow from the summer months. So I mean, you talk to me about a decline in June and July, and then I'd be more concerned. But it's kind of like TiVo. If I could buy stock at trading at 6 to 7 times enterprise value free cash flow, I do it.
okay. Also
Clean
taking.
balance sheet too on Live Nation too. And they got fortress balance sheet, and a lot of hidden assets. They own about 47 arena venues across the country. So, this is a company if it was ever breaking up, uh, you probably add another $300-400 million to the cash on the top line on the balance sheet cash, largely owing to the assets they own.
Okay. I know when Brent booked you for the show, you guys were talking Netflix a little bit, and I know you're not.
Yeah.
Yeah, I know you're not covering the stock anymore, but you probably still have an opinion on it. That thing is
Yeah, I mean,
really.
I dropped it to short it, and that worked out halfway. I lost money initially, and then I made it back, last couple of days
Okay,
with a
and
little bit of a
holding
profit.
on the short side, or
No, I took 2/3 off. I still got a third of my short on.
okay, all right. So if you're
I got
covering,
options laddered between 200 and 300.
okay, good. And so obviously, if you're covering the stock, you can't
No, I
be
can't
too.
do anything like that. So, but I mean, fundamentally, we have more competition. We have a lot of issues between House of Cards and financing and execution there that I think Wall Street doesn't really appreciate, right? So they just had a dust up with the state of Maryland. They could have canceled the show. Maybe
Really?
it doesn't get canceled now, but they're taking $15 million out of the mouths of children by cutting arts programs in the state of Maryland to give to Kevin Spacey. So I don't know, if that's going to gain any traction, but that's what happened.
Whoa.
We were promised, kind of 15, 20 originals this year. Looks like they're going to come in at 8 to 10. The off-balance sheet debt of this company, for shows that they promised they air, but they haven't aired yet, is $7.5 billion on a $4 billion top line. So we think that's a little excessive. And you see the competition is streaming into the market, so to speak.
Oh, right. Everyone is popping up. So, okay. Well, anything else? I mean, I have your other stocks here that you cover. Do you
Yeah,
have
I mean, like,
any compelling
we've been doing,
buys?
we've been doing it against the Netflix, and we kind of we recently upgraded AMC. Hasn't worked out because the stock got shellacked yesterday. But we recently upgraded AMC. We think they're in a good. They're going to have a spectacular quarter with The Walking Dead this quarter, and we think they have enough shows in the pipeline to offset, the kind of the sunsetting of Mad Men and The Walking Dead and that kind of thing. And we think Time Warner is kind of interesting. They're going to spin out their own media assets. I mean, this is kind of a game plan that's worked. They're going to spin out their own media assets. HBO and HBO Go, I mean, seem like they're on fire. I mean, Game of Thrones had 6.6 million viewers. We think, the unmeasured viewers takes it to 10 million. CNN, after that flight tragedy, seems to be on the mend a little bit in the ratings, and if they can maintain that momentum, it's been a big loser for the company, but if they can maintain that momentum, they get back to profitability at CNN. And it's not a bad. The valuation is just a little hair cheaper than CBS and Disney and all that kind of thing. It's a pretty well-run company. So combination AMC Time Warner against a Netflix short, that's where we'd be at.
Okay, little pair trade there for our listeners.
Yeah, and maybe include some MSG in there too.
Okay, all right. That's Rich Tullo.
$300 stock. There's a lot to hedge.
Yeah, exactly. All right, Rich Tullo, Albert Fried and Company, giving us his takes on the stocks he follows in his sector. It's a good sector to follow. Rich, thank you very much for coming on the show, and we hope to have you back on again.
All right. Thank you very much, sir.
All right, have a good day.
Have a good day.